Saudi Aramco is set to price range at $1.7 trillion, putting it in the running to become the world's largest IPO. The oil giant plans to sell 1.5% of the company in a $25.6 billion IPO, beating Alibaba's current record of $25 billion in 2014. However, this valuation is still more than what foreign institutions have been willing to pay. In an effort to list the company at a valuation that is acceptable to Crown Prince Mohammed bin Salman, who is making this IPO the centerpiece of planned economic reform, Saudi is officially confining the IPO to the kingdom and Gulf states. Aramco is the world's most profitable company, but this is a bet on oil at a time when global demand is expected to slow from 2025 due to measures to cut greenhouse gas emissions and the rising use of EVs. There is also the overhang political risk as Saudi government will continue to control the company. Given these risks, foreign institutionals have been unwilling to sustain the $1.7 trillion valuation, and Aramco now has to rely on local demand. This is a huge blow as the IPO was meant to bring in a large pool of quality investors who are also shareholders in Aramco's competitors such as Royal Dutch Shell and ExxonMobil. Aramco will not be able to sell shares directly to investors in the U.S. and other markets, as the IPO will be restricted to Saudis and a select group of 1,500 qualified foreign investors permitted by market regulators. And for more on this and other market movers, we're now joined by Peter Schiff, CEO of Euro-Pacific Capital, and Todd Bubba Horwitz, Chief Strategist at Bubba Trading. So, Bubba, let's start off with you. It seems like the only way that Saudi Aramco can sustain its nearly $2 trillion valuation is by artificially buffering it from the global markets and offering a sweetener to investors in the form of local banks making loans available for the sole purpose of investing in this IPO. So what is the purpose of this anyways? They don't need to raise any more money. It's already the world's most profitable company. And its previous goal of getting Aramco circulated and diversified outside of this region seems to be a moot point if now they're limiting it to only domestic investors. So why go IPO now?
Do we know that they don't need the money? I mean, do we know that they're the most profitable company in the world? I mean, I think there's a lot of questions on what the real details are. Now, I'm not saying they're not. I'm saying they're coming out and they're bringing this IPO to market because maybe they want to have the billions of dollars to play with. Maybe they don't mind paying the 4.4% dividend, which is higher than their competitors and what they want to do. I mean, again, there's a lot of reasons to go public. But again, I think the other thing we're looking at is the overall decreasing demand, plus the fact that they have actually a general competitor in the United States. I mean, we can produce enough of our own oil. We are no longer held hostage by OPEC, Aramco, or Saudi Arabia. So there's a whole bunch of things that could be creating this. But at the end of the day, I mean, who couldn't use an extra $26, $27 billion laying around and just to put it back and flush it around the markets? I mean, you know, to me, it's easier for them to do so, and it doesn't cost them anything. And again, do we know that their profits are really there?
All right, Peter, well, let's look at this. And the other current reigning IPO leader, Alibaba, is also planning a secondary HK listing, Hong Kong listing, that could raise $13.8 billion, set to trade November 26. Why do you think they're looking at this secondary listing now?
Well, you know, there's an old saying on Wall Street that you feed the ducks when they're quacking. And I think that's what they're doing right now. I mean, you have some markets making record highs. You have some speculative demand for the right issues, not all issues. So there are a lot of speculative stocks that are blowing up right now. But Wall Street and investors are still buying the ones that have momentum. And I think Alibaba is taking a look at that, and they think they could get a good price, so they might as well sell.
So if Alibaba has such good momentum behind the stock, why is its market valuation half that of Amazon when currently they do even more business, more revenue? Their EBITDA is higher than Amazon already.
Well, it's hard for anybody to have a valuation as high as Amazon. I mean, there's a lot of speculative money that's in that stock. And I'm sure one of these days it's coming back down to earth. I just don't know when that is.
So now, Peter, let's go back onto the domestic front. We have conflicting reports and sentiments yet again from China and the U.S. The mood in Beijing right now is increasingly pessimistic as Trump refused to scrap tariffs, dampening hopes for a resolution. The U.S., however, seems more optimistic with the markets up today, and Larry Kudlow reiterating yet again that they are getting close. So why are we getting the conflicting reports here?
Well, first of all, I think the Chinese are actually posturing for a negotiation. You know, if you're negotiating with somebody, you don't want to admit that you're close to a deal. You want to say that a deal is far away, because that way you can try to extract more concessions from the other side and get a more favorable deal. So I think when you hear the comments from China, that's what the Chinese are trying to do. But I think Trump has a different agenda. I think Trump only cares about goosing the stock market. And he knows that every time he comes out and says that a deal is close, we have a deal, it's going to be great, he gets another 100, 200 Dow points. And so that's what he cares about. And so as long as the market is going to keep running every time he cries wolf, he's going to keep crying wolf.
What do you think about that, Bubba? Do you think that's true, that this is just about goosing the market? And ultimately, is there ever going to be a quote-unquote winner associated with this trade war anyways?
First of all, I don't believe we all know that President Trump wants the markets to go higher, but I don't think that he's using the China deal as a reason to pump it higher, because typically you get some bad news, it flushes right down for a few minutes anyways. But I think one of the things you're seeing here is that, listen, the markets are going higher because there's no place else to go with your money today. If you want to get yield, you have to go to the United States stock market. So that's what you're seeing, is this money chasing and chasing. Is the market overvalued? Probably. Will it sell off at some point? It 100% will sell off heavily at some point. But the question is it tomorrow, or is it a year from tomorrow, or is it 5 years? We don't know when that sell-off is going to come. We know it's coming. It always does. It's been the history of all markets that there's always a meltdown. But again, do we know when it's going to happen? We have no idea. We have to continue to chase it up, and that's what you're seeing. You may be seeing, as they say, the fools rush in right now. Maybe this is near the top. But at the end of the day, the markets will go up until they don't, and we just have to be prepared to sell. You know, as a trader, you have to be prepared to sell it when it's time to sell it, and that wouldn't be until it started to come down. Certainly, you don't want to try to pick the top.
Yeah, and Bubba, speaking of unsustainability here, despite the trade risk to the downside, the market continues to grind higher like we're talking about. But is this really due to trade optimism, or is it more likely the fact that the Fed and the ECB, they keep injecting these billions, tens of billions of dollars in liquidity every single month, which clearly is artificially boosting the market? So how much longer can we sustain that?
Well, that's a great
I agree.
question. Is that for me or Peter?
No, that was for you, Bubba. Go ahead. Get him.
Yeah, as long as the markets remain with free money, as long as they continue to give it away, that's where the money's going to go, right? I mean, you're going to go where you can get the highest return, the lowest borrowing cost, or the highest return, and this liquidity issue is ridiculous, okay? Because negative rates and what the ECB is doing is totally off course, and of course the Fed, has manipulated the dollar and manipulated the rates forever, and they have no idea what they're doing with it. I mean, it's really a lack of common sense. But at the end of the day, President Trump happens to be right that they could lower rates here only because we could still borrow that money, which is what we're doing with it. We're borrowing money. We could borrow at a lot less of a rate because we're still at one full point or 3/4. We're still the best game in town.
Yeah. So, Peter, do you agree with that sentiment that right now there's nowhere else for investors to put their money except for the U.S. equity markets? Because the precious metals have been getting a lot of love, too, especially with palladium and platinum leading the forefront instead of your regular gold.
Well, I disagree with that completely. I think there's pretty much, a lot of good places that you could put your money long term that are going to be much better than the U.S. stock market. I think the U.S. stock market is dramatically overvalued. And the reason it is going up is because the Federal Reserve is creating money. It's doing QE4. But, investors expect QE4 to be like QE3. But there was a big difference. You see, when the Fed did QE3, investors were still foolish enough to believe that that was the last time they were going to do it. They actually bought the Fed when the Fed said that they had an exit strategy, they were going to shrink their balance sheet, they were going to normalize interest rates. The markets were looking forward to that, and they thought that what the Fed was doing was working. But it didn't work. It was an abject failure. That's why they're doing it again. But soon the markets are going to discover that QE is permanent and that there's never going to be a real reduction in the balance sheet. The balance sheet is going to grow in perpetuity. And I think we're going to have a dollar crisis. I think we're going to have a sovereign debt crisis. I think this is going to end very poorly for people who have been enjoying the paper gains in this stock market bubble. And I think the smart money is already out. But if you're in, you need to get out and look at other stock markets that will benefit from the dollar's demise and that will benefit when money is allocated out of U.S. assets to assets in other parts of the world. And yes, you mentioned precious metals. Gold is a much better place in the U.S. stock market. I know that gold has been outperforming the stock market over the last 5-10 years, but it hasn't been outperforming gold since the beginning of the millennium. Gold is doing better than the Dow if you start in 2000. But I do think over the next 5 to 10 years, the price of gold is going to dramatically outperform the Dow.
And Peter, speaking of which, there was a meeting Monday between President Trump and the Fed Chair Powell. Now, Trump is known to attack and disparage Powell for not doing more to stimulate the economy, for not dropping rates negative. So right now, are we seeing the independence of the Fed in question, and that Trump can rely on the Fed now as a backstop in his trade war with China?
Well, I've questioned the independence of the Fed for a long time. In fact, I think the independence is really just a smokescreen. I think the Fed has been working hand in glove with Congress and presidents for decades, and I think that is continuing now under Trump. That is why the Fed is cutting rates. That is why the Fed is doing QE. But it's not really stimulating the economy. It's stimulating the bubble. That's all that's happening. And Donald Trump was correct when he criticized Janet Yellen for pursuing these tactics when Obama was president. And now he's applauding, or actually still criticizing, Powell for not doing it enough. He wants negative rates. He wants even bigger QE because he doesn't care about the U.S. economy. All of this is counterproductive if you care about the U.S. economy. All he wants is to make the numbers look better. He wants to get the stock market to go up so he can claim that that proves that he has a successful presidency. But the reason the Fed is pursuing these policies is because his presidency is as big a failure as Obama's.
And Bubba, let me just get your last word on this because we're almost out of time. But what are your thoughts on that? Because obviously connecting not only the Fed to interest rates and the printing of money, but also to unemployment. The fact that they have this dual mandate that really doesn't seem to be under their purview, does that muddy the water even more?
The Fed has a huge problem. Their mandate is supposed to be forever. Okay, the Fed has stayed away from what their real mandate is forever. They've already done a number of things that don't make sense and are probably not totally legit, is what they've done. But they do them anyways because they do have Congress. But again, one thing, just to Peter's point, the best investment in the last 150 years has been the U.S. equity market. You can say whatever you want about the bubble and they're going to collapse, but the best investment in 150 years has been the U.S. equity market. It continues to be the best investment. Eventually, it will sell off and break, and there'll be time to maybe run somewhere else. But for now, this money's going to continue to chase this market up.
That's all the time we have now. Todd Horwitz of Bubba Trading, Peter Schiff of Euro Pacific Capital. Thank you.